Hello ladies and gentlemen, and anything in between. Today's learning objective is to learn the definition and construct the statement of financial position. But first of all, we must know the meaning of the keywords I have provided down below. The first keyword is asset. It's an item that a business owns that is of value. There are two different assets. These are non-current assets and current assets. For example, machine is an item that a business owns that is of value. There are two different assets. These are non-current assets and current assets. For example, machine. Liability is an item that the business owes. Liabilities can be a current liability or a non-current liability. An example is loan. Drawing is a money taken from the business for personal use. Then we have capital, is any money invested into the business. Anyways, so what's a statement of financial position? A statement of financial position, also known as a balance sheet, shows the state of a business at a one moment in time. It lists all the business's assets and liabilities. It tells us the net value of the business. Statement of financial position can be used internally and externally. All statement of financial position must be produced in a specific structure to allow stakeholders to understand them, such as potential investors. The thing on your screen now is the structure and layout of a statement of financial position. First of all, we have the title at the top, where you write the business name and the date. After that, we have three columns, where you put 3 pound signs or dollar signs or wherever you're from on the top. Then we write non-current asset, and then we list all the non-current assets we have down below. I'll put an example down, such as property. After you've listed all your non-current assets, you must total them up. Then we have current assets. You do the same process as you did for non-current assets, but this time you only write the current assets. I've given an example, bank. Then we have current liabilities. You do the same for that. I've given an example, bank overdraft. Just for your information, you should never include bank overdraft and bank on the same statement of financial position. If you do have both of them, that means there's something wrong with your statement of financial position. Then we have net current assets. This is basically total current assets minus total current liabilities. Then we have non-current liabilities. I've given an example, long-term loan. Then you total it up and put it in total non-current liabilities. Then there's net assets. Net assets is net current assets minus total non-current liabilities. After we've finished that, we go into our finance by section. We have opening capital, capital introduced, profit or loss of the year. You get this figure from your income statement. Then we have drawings, and then we add or subtract them. Then we get closing capital. Closing capital should be equal to net assets, so they should be the same value. For example, if net assets is 10,000, closing capital should be 10,000. If it's not equal, then there's something wrong. Why create statement of financial position? It gives a true and fair view of what the business is worth, allowing managers and owners to make actions upon it. Potential investors will like to know about your business before investing. Statement of financial position gives them an insight into your business. If business is limited company, they must publish them online. That's the end of the video. Thank you so much for watching. After posting this video, I'll be posting another one where I do an example question. So if you're interested, just click on my profile, you might find it, or I'll just put the link in the comment or description or somewhere that you can find it. Anyways, make sure you like and subscribe. Goodbye.